in Europe, we are still a long way away from the right regulatory framework for a single European market. And I have come to the view that you need to have pan-European regulation of banks and indeed a pan-European lender of last resort. And at the moment in Europe, we have an uncomfortable position where in theory we have a single financial market where institutions can work across borders without any restrictions. On the other hand, we have 27 different regulators in 27 different countries who all operate in rather different ways. And I don't think in the long run that's going to work. Also, I think there is still quite a lot of work to do on some very big issues internationally. For example, things like how do you deal with failing institutions? The Lehman Brothers collapse told us that we lacked a mechanism for handling the fallout of the bankruptcy of a big financial firm. There's a lot of work going on to try to pull together some system for dealing with the resolution of a failing institution, but that's a long way away from completion. And also, I think there's a lot still to do on what we call the shadow banking sector. That's all of those institutions, whether it's mutual funds or hedge funds, who can effectively create credit outside the banking system, but which have traditionally not been regulated in the way banks are. And I think that's another big area of work which we've just scratched the surface of so far. At the global level, we're clearly in an evolving position. After the Asian financial crisis, the powers that be decided that we didn't have a body to coordinate and oversee regulation across the board, and so we set up the Financial Stability Forum, deliberately called a forum, didn't have any formal powers, was just a loose, informal discussion group. Then after the last financial crisis, the big one, people decided that the Financial Stability Forum wasn't enough, and we would set up a Financial Stability Board, which has got much more of its own staff and is clearly given some authority over regulators by virtue of the fact that it is the tool used by the G20 governments to chase progress, if you like. So the Financial Stability Board reports to the G20 on the progress of all the various regulatory initiatives, and that gives it some implicit authority, even if it doesn't have it formally. Now, in my view, we're still not at the ideal point. I think, first of all, the Financial Stability Board needs to be made into a proper institution, which it currently isn't. There's a working group underway trying to devise some rules, a kind of constitution for it, and I hope that that comes to a conclusion fairly soon. But even beyond that, there is a question of whether there is enough, there are enough teeth in the global system. So by contrast with the trade in goods and services, where you have the World Trade Organization, to which you can appeal if you think people are cheating, there is no equivalent in the financial world. And I think the Financial Stability Board should evolve in that direction, so that if it identifies that countries are not implementing internationally agreed standards, then it can at least blow the whistle, raise a red flag, what have you, publish and say country X is not meeting its international obligations, and therefore some consequences should flow from that. So I think we do need to get to a position where there is a kind of international policeman of regulation. Now, of course, the sovereignty issues are very awkward. Will countries be prepared to agree to that? Well, I think it's in their interests to agree that there is a global policeman in this area, because we've got some very vivid examples in the last few years of what happens when there isn't. But it's going to be a struggle to get all the G20 to come together to agree to that. But I'm encouraged by the fact that step by step we're moving towards it.